Good morning and welcome. This is 10 Years Hence. Our speaker this morning comes to us from Boston. Tara Kenney is Managing Director of Deutsche Asset and Wealth Management Incorporated. As a Managing Director at Deutsche, Ms. Kenney directs the firm's asset management business efforts in Latin America. She has been with the company since 1995, first as portfolio manager for Scudder's and Deutsche Bank's Latin America Equity Strategy, and later for the firm's emerging market products. Ms. Kenney spent 11 years with the Latin American Merchant Bank of Bankers Trust, acting as chief negotiator for Latin American debt restructurings, known as Brady plans, and as co-manager of the firm's corporate finance activities in the Andes. Previously, she worked for Chase Manhattan Bank and the Inter-American Development Bank. She serves on the boards of directors of various nonprofits with activities in Latin America, including Accion Internacional, LASPAO, Academic and Professional Program for the Americas, World Education and Development Fund, World Fund, and the Eco Enterprises Fund of the Nature Conservancy. Ms. Kenney received a BA in Political Science and Spanish from the University of Notre Dame in 1982 and did graduate work in economics at the Pontifical Catholic University in Lima. She earned an MBA in finance from New York University's Stern School of Business in 1991. Ladies and gentlemen, please help me welcome back to the Notre Dame campus, Ms. Tara Kenney.
Thank you, Professor. Thank you. Can you all hear me okay today? All right, great. It's truly a pleasure to be here back at home, although this is much different in terms of the campus than it was when I was back here in 78 to 82. I was a political science major at the time and Spanish, as your professor mentioned, so I didn't have the opportunity to take any business courses, so it's really, truly an honor to be here today. I like to start things out with a quote to put things in context. And this one, I think, hopefully resonates with you all. This is from Pope Francis's Evangelli, Gaudium, that he issued in 2013 when he first assumed the papacy. And it's really known as the joy of the gospel, in his words, the really first important papal document that he came out with, pronouncing what he thought should be our decree going forward. And if you don't mind me just reading it to you for effect. As the commandment says, thou shalt not kill, sets a clear limit in order to safeguard the value of human life, today we also have to say, thou shalt not, to an economy of exclusion and inequality. Such an economy kills. How can it be that it is not a news item when an elderly homeless person dies of exposure, but it is news when the stock market loses 2 points? This is a case of exclusion. Can we continue to stand by when food is thrown away while people are starving? This is a case of inequality. Today, everything comes under the laws of competition and the survival of the fittest, where the powerful feed upon the powerless. As a consequence, masses of people find themselves excluded and marginalized, without work, without possibilities, without any means of escape. Now, I know this sounds a little heavy for a Friday morning, but what I hope to do today is to show you that there is a way forward in terms of promoting inclusion for the masses in our society today. I'd like to touch today on a few areas of expanding our financial opportunities for the world's poor. This is kind of under the umbrella of impact investing, which is a concept which I think has really gained a lot of traction in our markets today. So we'll talk about that as well and what that might mean. We're going to look at the emerging consumers and the use of technology. I like to call it the fintech space, where we're bringing financial engineering and technology together to be able to promote financial inclusion at the bottom of the pyramid. We'll talk about the social and economic benefits of this inclusion. And then, because of my involvement with Accion International, and I think there are a few in the audience here who I've been talking to over time about Accion. Accion I've been on the board of for almost as long as I have been involved with Notre Dame. It's kind of an interesting story. As I got out of Notre Dame in 1982, didn't really have a job. I was blessed by a fellowship to go live in Lima, Peru. I ended up working alongside taking courses there in the field of microfinance, but at the time it really wasn't known very well. I came to know a lot of programs there, including some that were working in conjunction with Catholic Relief Services and Accion together, showing again partnerships. We'll talk a lot about partnerships today in my discourse. Excuse me. And after I returned from Peru and went to Wall Street, I got to know a few bankers who were very interested in this field as well, of promoting income generation at the bottom of the pyramid. There were a couple of Notre Dame grads around at the time, including a fellow who had started Accion, excuse me, back in the 1960s after he got back from the Peace Corps, named Joel Blanchard. And Joel and a couple of guys in a garage, basically, in Venezuela in the middle 1960s, came up with the idea of making small loans to the Venezuelan women in the marketplace who really needed some access to capital. They pooled their money from friends and family and actually started this very first concept of microlending way back in the 60s with one of your own Notre Dame graduates. So I'm very proud of that root of Accion and proud of the fact that I serve on the board of directors today. And as you'll see, we bring a lot of partners to our world in what we do, and I hope today we'll convince some of you to join our efforts. Through Accion, we're going to look at two quick case studies. One is a fintech company with its origins in Santiago, Chile, called Tiaxa, which is breaking down the barriers for cellular technology failures, if you will, in terms of the poor having access to credits to be able to keep their cell phones running, because that's a very important means of business for them. And the second is a case study which has been a little more controversial, of a case called Compartamos, the very first microfinance bank to do an IPO in 2008. So you'll see what Accion's involvement has been with these two cases. And finally, as I work for Deutsche Bank by day, and I do a lot of this other work by night, weekend, and otherwise, I'll talk to you a little bit about what Deutsche Bank is doing in the impact investing arena as well. I'd like to also ask, while we're doing this today, if you have any questions, please raise your hand. I'm happy to stop and entertain them now or at the end of our talk today. Okay. Why are we here? Over 2 billion people live in poverty and lack access to financial services that could improve their lives significantly. The global financial system, as impressive as it is, fails them. Yet, for the first time in history, 3 major developments we'll talk about today make it realistic to imagine a world where we can change this. Technology, special digital and mobile communications, big data with its capacity to better understand individuals' behaviors, and microfinance, which brings affordable financial tools to the poor, make a vision of financially inclusive world a possibility. I mentioned Accion, and for those that might not know much about microfinance, it had its evolution in the 60s with that garage-based lending enterprise. And over the next 50 years or so, which we've been involved, we've tried to build the next frontier of financial institutions working in this sector. We've pushed them to think outside the box, as I hope you'll see when we talk about what we're doing today. We've tried to build a strong industry, and we've looked to the financial and the technology sectors coming together to do that. And moreover, as a leader in the space, we feel it incumbent on ourselves to be the role model for what is and is not ethical behavior in this sector and promote high standards. The adult population, as we talk about, that has very little access to financial services can be summed up in a couple of words. You've got 65% of the Latin American community, in which I've worked for the last 30-some years, without access to banking channels. That's savings, insurance, or credit. You've got Africa, over 80%. Here in the United States, roughly 100% of our household have access to some sort of financial service. And in Asia, of course, it's also unmet, although it's growing very rapidly. This provides a huge community of unbanked, which you might say is a very big challenge, but it's also an opportunity for us. Oops. Thank you. The definitions of impact investing range from making a microloan to we'll talk about a little bit later, some of the high net worth individuals and the new millennials who are coming into wealth from their families who want to do good and invest and make a double bottom line or triple bottom line in some cases happen. This concept has a target market which is huge, as you'll see. There is a lot of investment that's required to generate the social and economic return. And the intentions are based on the behalf or the belief that financial innovation can be used to directly help society's neediest people. I had the pleasure of hosting a couple of weeks ago Carolyn Wu, Dean Carolyn Wu, your former dean here, at my office in Boston of Deutsche Bank. And she was in town. She's now the director of the Catholic Relief Services. And she is in charge of trying to help the poor worldwide through all of the good work that CRS does. If you've ever looked at the Catholic Relief Service model, we work very closely with it here on campus. They started right after World War II as an institution to help post-war Europe and to be able to provide food to the hungry in Italy during Christmas time. What a better charitable act can be done during that time right after the war. From that, Catholic Relief Service grew into a huge development organization, which, with Carolyn Wu's leadership, since she joined, has really promoted a lot of business models in its operations. Carolyn talked to me a couple weeks ago about bringing innovative financial schemes to her marketplace. For instance, they work in Ghana with farmers. They want to make sure that the farmers' goods get to market without paying a middleman. They want to bring financial techniques together and make sure that the profitability is better, that this farmer understands the supply chain and has inventory control, these words that you all are studying. Obviously, something that this person probably has never had any formal education, something that CRS can bring to them. So the likes of Carolyn Wu out there with Catholic Relief Service doing this type of impact investing work is something I think that we should be very proud of. And again, that's Notre Dame flying the flag very, very proudly in the most remote corners of the world. Okay, this is kind of our opportunity set for today. If you think about the unbanked population and, as I mentioned, growing purchasing power, which we're seeing in this part of the world. We've got, I may slip through a few of these a little quicker. Sorry there. Oh, this is my balance of the pyramid, which maybe takes a while to load. I'm not sure. Okay, here we go. We talk about the bottom of the pyramid being the emerging consumer class that we're all after, from businesses to microfinance to even charitable institutions like CRS. You've got roughly, if you take a look at the lowest segment of the population earning less than, we call it usually $2 a day, that can be a huge marketplace for businesses, for banks, and for the growing consumer goods markets. Just look at the chart over here from 2010 to 2025 in the shift in demographics. The emerging markets will roughly be, by 2025, half of the world's consumable and consumption standards, which provides a great growth market for companies from Procter & Gamble to Chase Manhattan Bank. All right, we talk about, I'm sorry guys, this is a little slow today. All right, the benefit on poor households is what we're after in terms of financial inclusion and a welfare transfer, as Pope Francis talked about. If you look at the scattergram and you see the financial inequality in terms of where GDP lies on the spectrum, there's a tremendous opportunity for GDP growth and consumption to work together in making finance available. These are just a few more charts to show you the possibilities in terms of where this income can come from the bottom of the pyramid and be a catalyst for the likes of Accion and other players in this field. Looking at the mobile penetration figures here, you've got roughly 41% of the emerging markets, or developing worlds, if you will, with access to cellular technology. 88% of the world today has a cell phone in their pocket, and almost half, as you see, are in the emerging markets. This takes place for those that have traveled in places like Peru and Colombia, and even in Africa, Landlines don't exist anymore. You don't put landlines in. Even in our households here in the States, if you don't have a cellular phone, you can't exist. Here's, I think, a great chart that shows the proliferation of fintech, as I call it, and the difference between financial services available and the high tech available. So in Latin America, you've got only 39% with access to banking services, but over 100% with cell phones. Look at the Facebook users and look at internet coverage. Even in some of the most remote corners of the world, including in Latin America or Africa, you have access to internet and Facebook users, but yet they lack financial services. The technological change is at a huge rate, unlike any in the past, where the landline telephone has become obsolete, but a cellular telephone, with the likes of the recent Economist, I think don't know if you all have a chance to read this. I highly recommend this for you folks if you have time. It's dense, but it has great articles. The one from the end of February says, Planet of the Phones. By 2020, 80% of adults will have a supercomputer in their pocket. That's 80% of the world's population, including our emerging markets. These are some of the concepts that you probably are studying here, which were unknown in my era here at Notre Dame, with cloud computing and big data and what's happening in terms of your phone becoming the supercomputer. This is going to enable financial inclusion at the bottom of the pyramid. The World Bank talks about the Silicon Valley for development. In a second, when I show you some of what Accion's doing, investing in these fintech companies, many of which had roots in Silicon Valley, with folks that went to school, business school, and returned to their countries, and then came up with these creative ideas. We're marrying both the skills and ingenuity in terms of the fintech space with what the needs are in this growing market. This is the Accion legacy, if you will, of having been involved for 50 years. We've given rise to 63 microfinance institutions in 32 countries around the world, in 4 different continents. As obscure as Inner Mongolia, where we got the first banking license ever to operate in China. However, they gave it to us in Inner Mongolia. We didn't know how cold it was going to be in February in a place like that to set up shop. But that's proven to be a very successful enterprise for us. Which just shows you how far-flung we can go. Our current investments are in 45 companies. We'll look at a couple of these today, and we have assets of over $300 million, which for a non-for-profit is quite remarkable. Our footprint is global. We have centers of excellence around the world. Our hub is in Boston, and we also have an office for our fintech work in Washington, D.C., and we're enabling environments as far as I mentioned in Inner Mongolia and India, where we really see an acute need, and we've really made several investments recently, which we think will be groundbreaking. We started back in the 60s, however, flash forward back to the early 80s when microfinance really got started. There were trials by the likes of Grameen Bank, and you might have heard of Grameen. The Nobel Prize winner a few years ago was Muhammad Yunus, who started Grameen Bank in Bangladesh to give village banking loans to the poor women in Bangladesh. He was awarded the Nobel Prize for his work with Grameen. We are partners with Grameen in India today, which is an amazing concept given that we were at odds with Grameen for many years because our model was based on a commercial, on a scalable, and on a renewable, meaning credit system where we offered a market interest rate, and he was more concerned with subsidized credits for the poor. So we have evolved over 30 or 40 years to a meeting of the minds that in this space you have to be able to be profitable to be able to endure. We've adopted a commercial approach in the mid to 90s. We transformed a bank in little old Bolivia called Banco Sol today, which was a microfinance entity in Bolivia, started by Accion in the 1960s. And that bank today is the largest bank in Bolivia. I don't know if there's anyone here in the audience today from Bolivia, but if you are, you would know of Banco Sol. It is one of the most heralded and successful banks in the country, catering to the poor. We'll look at the curve as we go forward with Accion from our humble roots in the garage in Venezuela to doing our first IPO with our Mexican microfinance entity, and now launching our second fintech fund called Frontier which we're about to hopefully launch this quarter for $100 million to invest in this space. Okay. We've talked a bit about disruptive technology and what it can mean to bring these services to the poor. Some of you might have seen in your business school cases this company called M-Pesa that started in Kenya that is also a mobile money system. 80% of Kenyans use M-Pesa, yet only 20% of Kenyans have access to a formal bank account. M-Pesa enables them to pay their bills, enables them to make cash transfers, enables them to accept remittances from Kenyans abroad, sending money home, a very important concept. Yet, these folks still don't have access to a formal banking channel. These are some of Accion's partners currently. It's a smattering of companies that I think many of you know very well. Household names here, including my own Deutsche Bank. Interestingly, this space brings together competitors in a collaborative way. We're currently working both with MasterCard and with Visa, two very staunch competitors, typically, to promote access to credit cards in the emerging markets. And both of those providers want to work with us because they know that we understand the space and we can make their products more available. All right. Working toward scalability and profitability is our mantra. Financial and social goals in terms of where we're going with impact investing is really what we're after here. And with what is going on in the marketplace changing so quickly, we have to remain relevant and we have to invest for the future. These are two different funds that Accion has invested in over time. For all the finance majors in the room, you would look at these returns and say, wow, how did you accomplish this? We took risk. We took calculated risk in markets that we knew well. And we have a multiple of returns that most even venture capital funds would salivate for. I mentioned the new fund that we're hopefully going to close later this quarter. That fund will actually, the Frontier Fund, which will be an impact investment fund investing in these fintech concepts. We actually were recently awarded at Credit Suisse, their high net worth individual bank is going to be offering that to their clients to be able to invest in terms of impact investing possibilities. So we're very thrilled that Credit Suisse has chosen our fund to be on their offerings. We source many of our deals ourselves, as you see, 82% proprietary deals, and then others come to us by way of our reputation and in terms of folks knowing who Accion is in the marketplace. You can see that the geographic dispersion is quite wide. We aim to go worldwide in finding the best potential deals for these funds. This is a sample, without saying the names, of some of the investment opportunities. As I'm part of the finance committee for Accion, we get to review these and approve them before they go for financing. But you can see that the deal size is not small. In this space, $10 million is quite a lot for a startup company. And again, this is just, I like the photos to show you we're global. Here's Global Cas in Peru, a company which I've invested, well, I haven't invested personally, but I've been to visit in terms of diligence. Zuna working in Africa, Tiaxa, which I'll get to in just a minute, which I think is a real star for our portfolio, and a low-income housing loan in India, where self-employed workers can get access to mortgage credits. This is just to show you, with our involvement and others' investment, we're able to really scale up and make change in terms of the difference we're making. All right, let's talk just for a second on Tiaxa. Tiaxa is a company started in Santiago, Chile, for any of you that might have Chilean roots or happen to be maybe studying there through the Notre Dame program. Tiaxa was started by a Stanford Business School student who returned to Chile and realized that there was a real breakdown on cell phone usage among the poor, where their calls would drop and there's a tremendous inefficiency if they're in the middle of a transaction and the call drops because their prepaid card ran out of juice. You might know that in Latin America, people carry around 4 or 5 prepaid cards in their wallets because that's their means of their means of payment and their means of communication. But yet when you run out of that and you're in the middle of a transaction, obviously you're stuck. So he went back from Stanford, founded this company to run the analytics for a Chilean phone company that wanted to study it and understand how they could break down that logjam. After providing the big data analytics for one of the cell phone companies, they decided, hey, why don't we launch the concept ourselves and actually offer these loans, nano loans, prepaid credits for customers who have already qualified based on their usage patterns, and they had a good understanding that they would be good borrowers to have ready access to immediate cell phone usage or continued cell phone usage. They started in Chile, then with one of the Chilean companies. They teamed up then across the globe with many of these names that those of you that look at this part of the world are probably familiar with. Today, Tiaxa is operating across the globe with various partners, as we've just mentioned, and Accion's involvement since the start. We made $1 million loan in Tiaxa to begin with, a $1 million investment, excuse me, that was an equity stake in Tiaxa, in a company which we expect down the road may go public. This is some other examples of where we put our money in impact to use with others that down the road, many of these form part of our Frontier Fund and will be an accelerator for finance. When we met with Tiaxa recently, and they came to our Accion board meeting last month to give us an update on how it's going, they talked about the key achievements and the challenges going forward. We want to partner with them and continue to help them grow, of course. My own bank, Deutsche Bank, recently gave them a loan because they felt that they were such a good credit risk to help them grow. They've given them a loan along with a couple of insurance companies in demonstrating that they have true reach in terms of the marketplace. Frontier, they feel, these are the words of the Tiaxa CEO, that we've been a very successful partner for them and truly a source of their growth. The next milestones that they want to try to do is to reach further and further of the unbanked population. They've got to encounter regulatory conditions which are changing rapidly as well, and now you might view them as a bank, so they have to be prepared to deal with regulators, and they'll probably need our services for that. So from Tiaxa, which is a very recent example of a company that's part of our current portfolio, I want to take you to the case of Compartamos and Gentera. It changed its name to Gentera recently. Compartamos is a concept that, again, goes back to, I think, an ethical business case study of two entrepreneurs, actually two business students, that came out of Mexican business school, and in 1990 were so moved by Mother Teresa's visit to Mexico City that they decided, and they were from fairly wealthy families, they decided to start a rural banking program in Mexico, the first of its kind, 1990. And they looked at this, again, bottom of the pyramid, focusing on classes C and D with a very low income, but folks that probably had some business intuition that wanted to start a small market stall or sell goods or take a shoe shining business and turn it into a bigger type of enterprise. And they looked at the population of Mexico, which is roughly 100 million people, and targeted about 60, which could be a good constituent base for them in the rural areas of Mexico that could be the base for their business enterprise. The two Charlies, as we call them, because both named Carlos, started Compartamos in 1990. By 1996, they had 26,000 clients, these rural village women who were banking with them. And this took off in the 2000s after Accion made an investment in them in about 2000 of $1 million when they were coming to Accion, USAID, and the IFC, which is part of the World Bank, and had demonstrated a success but needed capital to grow. Accion and others pooled a total of $6 million in 2000 into Compartamos, which really took off after that, as you can see, the proliferation of their clients. And in 2007, they felt there was such demand to go raise more capital in the international capital markets. At that time, the buzzword was cracking the capital markets for microfinance, and Accion was the leader in that effort. And Compartamos made its debut in the market with an IPO that was an unheralded success. Nothing had been done like this before. For those that look at banking metrics, an ROE of 56% is something that I don't think you can find in any type of commercial institution, certainly a bank today. My own bank's ROE is below 5%, as is Citigroup's as today, which is for obviously very different reasons. But in the Mexican banking system, which at that time was doing quite well, right before the 2008 financial sector crisis, the Mexican banking system had ROEs in the high teens to 20%-ish for the very best performing Mexican bank. So you can imagine that a bank, which was a full-fledged bank at the time because we had a commercial license, at a 56% ROE would be attractive to investors. Accion launched its IPO. It was well oversubscribed, and it raised a total of $450 million from investors from that one IPO. Pretty good from a start of $6 million a few years before. Investors were seeking liquidity for this type of work, and this was a bank that could provide that. It had very high capitalization rates, as I just demonstrated in the ROE. There was a very little offering of bank-available IPOs at the time, part and parcel of the Mexican equity markets. But in terms of an equity play on Mexican markets, this was deemed to be a real true, a good bet. So we had a lot of crossover investors, including the likes of Deutsche's portfolios and others that invested in Compartamos, and attracted a great deal of retail money as well. A closer look will show you some of the multiples. Book value of 12 times is again something that you would certainly not find in any type of banking deal today. And again, the placement was over 80% international investors, demonstrating the tremendous appeal of this type of work, investing in microfinance in a place as obscure as the rural part of Mexico. I think I talked about some of the success factors. There was a dearth of other IPOs in the market, certainly no way to play other Mexican banks, a growing consumer in Mexico, which made this very attractive, and again, a very well-run institution and good partners. It was a milestone for Accion because it brought with it, we were a 20% owner of Compartamos. It really, truly gave us our balance sheet to work with in the future. I mentioned the Inner Mongolia investment that took place after that. I was on the investment committee when we looked at this and we said, are you kidding me? We're going to invest a couple $1 million in Inner Mongolia. But it was incumbent on us as Accion to invest where others would not go, taking risks that we thought were calculated. And with the bonanza of the Compartamos proceeds, we decided it was our mission to go and put that money to work in places where others wouldn't. It's enabled us to grow our platform, it's enabled us to invest in these fintech companies, and it's also enabled us to be the standard bearer in the industry in terms of helping others understand things like capital protection and over-indebtedness and the like. Just to kind of sum up what happened after Compartamos, others decided, wow, this must be a pretty good market to operate in, and it invited a lot of other participants, which we're happy for because competition will drive down interest rates, and interest rates in these markets are still extremely high and inefficient. Walmart, it's called Walmex in Mexico, it's the largest retailer in Mexico, and Walmart started its own bank to operate in microfinance. And if you think about it, the amount of remittances that comes from the US to Mexico by the likes of many of our workers and employees in our households, where does that money go? Well, at Banco Walmex, you could actually send your money to the Banco Walmex at a fraction of the fee that you would be paying to go to Western Union, which charges very high rates to send money abroad. Banco Walmex would have the consumer come in and receive the loan from their foreign family member and probably put a lot of it to use in their store. So it really made quite a lot of sense for Walmex to start its own bank. You'll see Prudential there because on the insurance side, they realized that in Mexico would be a very good target market for their insurers as well. So they started a small bank to capture remittances and participate as well. This has driven down the interest rates, which still today the interest rates are closer to 40% or a little below, still extremely high. And one would say, is this a usurious rate? And there's been still an outcry that microfinance, it's not a panacea to cure all of poverty, but enabling the access to credit at what is really truly a market rate versus the loan sharks, which is 3 or 4 times that much, is an effective tool. This is just kind of a flash forward. Comportamos today took its proceeds that it made from the IPO and reinvested in its business in providing insurance for the poor. Death insurance is something that's extremely important in these markets. Imagine if you're the head of the household and you have you're a sole proprietor. If you die, your family has to not only pay for your burial, but yet they're left with nothing. Comportamos has made it its mission to offer very affordable micro-insurance to its participants. It's also offering effective savings where there was not savings before. Truly, it was under the mattress, and that can be quite risky in some of these markets. So it has made a goal of putting that money back to work in Mexico, where today they've got over 3 million clients and are offering, oops, what happened there? Oh. Where's my son, Patrick? Okay. All right. Jim, what do we got? Help me here, thank you. Sorry, guys. Although the football helmet is a good touch. Okay, how am I doing on time? How am I doing on time? Oh gosh, where am I way ahead? Okay. All right. I'm going to talk about impact investing today because I don't think we have so much time, but I want to make sure we answer questions. There's been a lot of talk about impact investing and how it's going to really truly move the needle in bringing money to the double bottom line types of entities that are in such need. There is roughly about $6 trillion today in the likes of ESG, SRI. Many of you may have heard of these acronyms which discuss environmental and social governance types of investments. Notre Dame ourselves adheres to the Catholic disciplines in terms of our investment portfolio. I was fortunately with Scott Malpass on Wednesday night in New York. They held a Women on Wall Street event, and as one of the older ladies on Wall Street that is a Notre Dame grad, I always get to go and talk with Scott and the women about what's going on in the field. And Scott mentioned, one of the women, a recent Notre Dame graduate, asked Scott, how are we investing the Notre Dame endowment, which you all may know is about $10 billion, something to be very, very proud of. And Scott, we should thank for his good stewardship of that endowment. How are we making sure we're adhering to socially responsible investing and environment and social governance types of activities, not investing in Sudan and making sure that our carbon footprint is being addressed? And Scott said very easily, we at the Notre Dame Endowment, we were one of the very first to endow these principles because we had an overarching Catholic mantra in terms of how we would invest according to the bishops and the Catholic, one of the Catholic documents that came out many, many years ago. So that's enabled Scott in the Notre Dame Endowment to truly be a trailblazer and a model for other institutions. Of that $6 trillion, however, that's what is talked about investing. In real life examples, it's a little more difficult to put concrete examples to you today, but I'll try to talk about a few. It's been a lot of talk and no action with a certain piece of the portfolio. There's about $4 to $5 billion that today we talk about is really investable. And we've got some good examples of firms working in this space, but it's still in its infancy, and we hope will grow in the next 10 years exponentially. What's given rise to this? I think it's all of you all, the new millennium that is concerned about the environment, concerned about what type of businesses you're working for, concerned about your investment portfolio and making sure it's not investing in unethical companies. This has given a mandate to those of us in the investment community to do what is right for all of our clients, and you all are our clients or will be hopefully our clients. There's a rush of talent. I talked about a couple of those fintech examples. The young man from Stanford who went back to Chile and founded that company. Likewise in Africa and around the globe, you're finding business students and undergraduates that return to their countries and have a great idea, can find some investment and run with it. This is going to give rise to many more companies for us to invest in, which is terrific. And of course, as you do inherit wealth and create your own, you will have opportunities for investing that were never there before. A lot of the big players are on the sidelines still. I'd like to think that even our Deutsche Bank pension plan is invested in this space. We're starting to look at these things, but of course it has to always meet that double bottom line criteria for us. There has been much more on the ultra high net worth individuals that's been driving this. Some of the development finance institutions that you know, the KfWs in Germany, the IFCs in Washington, and the like, that have been real big proponents of this. Some of the insurance companies, particularly European insurance companies, they've been some of the very first to get involved in this. Deutsche Bank, being a German bank, has partnered with a couple of them in that fund that I mentioned to you, just gave the loan to Tiaxa and the like. Endowments like Notre Dame, growing, but still a long way to go. And then retail funds that are offering. There's still only a very small amount available. In part because there's a lack of track record. Some of these are very new, but this will grow with time. It's a bit fragmented still. And as you see, a lot of these products, some investors can say, well, it doesn't quite fit my bucket, so I'll let others invest in it for now and see how it goes. But this is going to change over time, and hopefully with all of you being involved in finance in these fields, we will have a lot more to go. In my own case at Deutsche Bank, we actually, through our foundation, which grew out of a concept in the late 70s, early 80s, the banking commissions mandated banks to give locally. So part of all the banks at the time had to invest in the local communities. It was called the Community Reinvestment Act. And up until that time, banks did not have a mandate to give small loans in their own communities. Accion was actually a recipient in the New York area of a bank from one of my former institutions called Bankers Trust, and we made tiny loans available in Brooklyn and the Bronx to micro-entrepreneurs that wouldn't have been able to walk into a Chase Manhattan Bank or a Citibank branch at the time. This still grows today, and I'm proud to say after 9/11, Accion helped keep afloat many small businesses near the World Trade Center that lost their complete businesses after the tragedy and needed small loans, a $5,000, $7,000 loan to get back on their feet. And Accion was able to provide those loans to the hairdressers, to the small pizza owners, and to some of the informal sector businesses operating in New York City after the tragedy so that they could keep afloat. Deutsche Bank and Bankers Trust was acquired by Deutsche Bank, so Deutsche Bank today does a lot of that work in-house through our foundation. We are a signatory to the UN Principles of Responsible Investing. Deutsche Bank was one of the first banks to sign the UN PRI a few years ago. That demonstrates, again, the tremendous reach of banks that have signed on to the PRI, saying they would adhere to those disciplines. I think that's going to give rise to the eventual deployment of capital as well. First, you got to get them to buy in, then you got to get them to invest. Deutsche has been a leader in the ESG space, particularly on the environmental side. Again, coming from our roots of being a German bank, the Europeans have been very big on the environmental fund focus for a long, long time. We have a clean tech fund that we launched before it was in vogue to be called impact investing. I'm very proud to say we launched a fund recently with our real estate investors called the Retrofit Fund, where we're buying up properties around the US and globally, and we're retrofitting them for energy efficiency, taking over the lease payments, and after we invest the money to make the lighting be lead compliant and the heating system more efficient, energy efficient, air conditioning and the like, that we are able to then find investors in this pool of real estate properties, and we've launched a very successful fund with some of those same insurance companies investing in, called the Retrofit Fund, and we were the leaders in that space. So we like to collaborate within our industry and find partners. Sometimes you would call them competitors, but in this instance, it's incumbent on all of us to work together to make sure that we make the world, I think, a better place. This is a decade of our leadership in ESG at Deutsche Bank with a lot of tombstones which advertise the deals that we've done that we're very proud of. These are a couple of the retrofit buildings that I just mentioned, one in Washington, which I think looks like a great place for you all to work, and one out in Seattle. And this is one of our portfolio managers that's involved in managing that fund, in the retrofit fund, where we take these properties and make them compliant in ESG. I started with Pope Francis, and I'll end with Pope Francis. But in between, I do want to tell you that, first of all, I'm most proud of being a mother to my son, who's here in the audience. I told you I wouldn't cry, so I'm not going to cry. But second of all, my Notre Dame education and my roots, having been here, having grown up here, having traveled the world for the last 35 years or so, and seen how much remains to be done, and even just simple things that you can do will make a real difference. The Pope exhorts us in his pledge here, which is part of the Gaudium that he came out with a couple years ago, to do what you can, to figure out a way to serve, to take what you've learned and make an impact. And that's really what impact investing is all about. You all may know, and you should be very proud, that Notre Dame and the likes of your dean here at Mendoza, the likes of Scott Malpass and Carolyn Wu, who I mentioned before, have been working over at the Vatican to make sure that we are implying all of the good impact investing work that we're doing both here at Notre Dame and which Notre Dame grads have been doing around the world. The Pope is very firmly involved. He speaks capital market talk. He doesn't disavow business practice. He wants to make sure that it works for the poor. I hope today I've conveyed that there's a tremendous opportunity to bring your business skills and your good ethics you've learned here to bear and making a difference at the bottom of the pyramid. It will be a very attractive and I assure you a very fulfilling career for you to do so. So thank you. If you got it.
So maybe less.
Okay.
So questions. Let me begin, if I may. Probably don't need Mike. You referred a bit earlier to Walmart and their banking activity in Mexico. They've announced their intentions to open banks in the United States throughout the first and second world. Is this, in your view, first a reasonable and a transparent approach to reaching the lower quintiles of the economic spectrum? Is it likely to work? And what prevents it from being exploitative?
Right. I think that's a great question. I'm not sure that model may work here, given the regulation in this country versus some of the parts where they've been successful. I mentioned Mexico. They launched the Banco Walmex several years ago. They've gathered quite a few clients, but they've not been able to truly tap into the other services that are needed, other than being a conduit for the flow of money really into their bank. Their bank, but it's largely for consumer purposes. Here in the States, with the regulations that they're going to have to abide by as a bank, I'm not so sure that business model may work. It could work in maybe the lower income communities that know Walmex, that shop there, because you have a very big population that comes from that class. Actually, all classes shop at Walmex, but Walmart, but particularly that part of the segment. But I think, I say let them try, and hopefully they'll have to abide by the same regulations that we all have to, and we'll see if they're successful. But it will be a lot more difficult in this marketplace for sure.
Let me follow with one more. You mentioned Venezuela. To what extent do you require the cooperation of central governments in your activity? Venezuela is particularly turbulent just now.
Well, you actually play right to my sweet spot, both because I started my banking career doing the Brady debt plans, as you might have heard, but also I worked as an investment banker in Venezuela, Colombia, Peru, Ecuador, that part of the market for many years. Accion started in Venezuela. I'm very sad to say we had to close the one and only microfinance bank in Venezuela several years ago because of Chavez and because of the very strict rules he put in place of us operating as a bank. He put a ceiling on interest rates that was so abnormal and so profitable that we had to actually close the only bank catering to the poor in that country. So there you go. Regulation can be so onerous that it can drive you out of the market. Prospects for Venezuela, I still see, are going to be very, very slim for quite a while. But what I'd like to actually highlight on the other side is a changing regulation for the better. I brought up Compartamos, and I think I referred to it being as kind of a controversial case. When Compartamos made all the money, when the investors in Compartamos made that $450 million, many of us were criticized. You're raping the poor. How can you make this money off village women? I mean, we at Accion have truly redeployed this in far-flung places. We've taken risks with that money. We made over $150 million in that transaction. We've redeployed 50 or 60 already, and we're every year putting $10, $15 million more to use. India is a country where microfinance, if you've looked at that case, it's been under the spotlight for about the last decade. There was another IPO done right after Compartamos, a group called SKS, and that one, very sadly, was very much criticized that it had been really raping and pillaging the poor in India. There were a rash of suicides afterwards of microfinance borrowers who couldn't meet their microloans, and a very sad tale, which was very much in the press a couple of years ago, which really cast a negative light on microfinance. I'm proud to say that Accion has been trying to work in terms of our education of the marketplace. There are microfinance lenders that are truly have no scruples and are acting under the guise of microfinance, but are truly money and loan sharks that are really charging much usurious rates that the recipient could never pay. And then there are those that are trying to do it at a commercial rate and drive down interest rates. So you get the good and the bad in the marketplace. Up until a couple of years ago, it was very difficult to work in India because the central bank, to your point, was the regulator and made it very difficult for microfinance to operate, particularly after the rash of suicides and whatnot. There's a new central bank governor in place, and he is much more constructive toward the sector in a very ethical way, making sure that we all adhere to very good business practices. And we're much more optimistic now that we can develop the market in the right way in India that hadn't been done before. So thank you for that question. The regulators can be a friend and a foe. Very happy about the way India is going right now. Very, very sad and depressed about where Venezuela is going to be for quite some time. Thank you. Mike.
Thanks, Tara. Actually, your point just brought up a question I want to raise, because if you have investors who are already, obviously they're different from charity, where investors want some sort of return, but are they nervous about, don't they get scared away from this type of backlash? As you said, if you go into some markets and everyone complains about, the return, and you have investors who you're trying to get capital from who want some sort of return, does that make your job that much more difficult trying to get them to stay in the game?
Well, I think the nature of impact investing is that double or triple bottom line, where you're making a profitable investment, because if it's not profitable, you might as well just make a grant, right? And make a donation. And impact philanthropy is also very important, very, very important. Obviously, it gives many businesses that start friends and family capital that may not need to be repaid. But in our case, we view it as something which it has to generate a return so that it is scalable and it remains, you remain in business. On the investor side, they're looking for it to generate a return. It doesn't have to be a venture capital type of return, but it has to generate something which is somewhat of a market base for the risk they're taking. But if you're doing good in the process, that's where it comes together and it becomes much more appealing to the high net worth investors, to the insurance companies, as I cited, to endowment funds. So that's where we're hoping. But again, the first and foremost, it has to generate some sort of return, or it will go out of business.
Are they doing it once again with a different spread, or are they trying to do it in the market? Do you have the credit and say, hey,
No, thank you for that. The Essential Capital Consortium, which just launched the $50 million debt fund, is investing at a market rate in these countries. But even though Asimo is going to be getting, Taxa and Asimo both are getting an investment from that fund, it's at a rate which they couldn't get otherwise. So it's still providing debt financing where it's not otherwise available, but at a market rate. Market rates in these countries, however, are much higher than we would have here, but it's still providing finance where it wouldn't be possible. Good. Thank you.
Hi.
Go.
Here. So how do you decide whether a project is worth investing, and what are the major criteria that you assess before making an investment?
Well, certainly geography. We're looking for certain selective, if you're looking at our frontier fund, if you will, which is about to launch. We've got projects in the pipeline that we have been doing diligence on for, in some cases, several years that we've been looking at, and it's now at the time where the investors are looking to make their investment. We're looking for certain geographies where we know we can make an impact, others where we won't put a dime in Venezuela, but we're very now interested in India. We're looking for, as I talked about, the fintech space where these companies can really break down some of these paradigms, disruptive technology, if you will, to make financial services available. But yet, there's still a lot of attention paid to the business case and the profit and loss statement if it's been operating. If not, if it's a startup, we actually have a second fund that invests in startup. The frontier funds are investing in companies that have had some sort of track record that we can assess. We have to, on the finance committee, we have to then take it and scrub it and say, all right, what's a realistic scenario here in terms of how it will operate? But you'd be surprised. There are so many companies that are operating at the margin that are tremendous ideas and just in need of capital. But we always adhere to what you all are looking at in terms of a cash flow analysis, if it's that type of company, looking at where, what's the competition, who are your business partners. Knowing your partner is also a huge part of who we get and do business with, because in emerging markets, sometimes it's very difficult to know what the business integrity is of your potential partner. And while maybe you could say, well, it's only $1 million and you have a $300 million balance sheet, $1 million going wrong is $1 million we could have deployed elsewhere to help the poor. So thank you for your question, but thankfully there are a lot of very, very good companies out there.
Hi.
Yes, hi.
You had mentioned previously about scalability of projects, and I was wondering, do you ever look at the cultural elements at work in where a project is taking place?
Sure. So you meant sustainability versus scalability.
Yeah.
Okay. Versus the cultural aspects?
How do you look at culture when trying to scale different projects?
Sure. Well, if I could go back to the Compartamos example, I think it is a perfect one where the two Charlies, having made quite an enormous sum from Compartamos, decided putting it back to work, scaling the business, meaning making many more loans available, was what they needed to do. But they also had to look at their constituents and say, now, we can underwrite an insurance program for you, which you've never had before. We can provide savings outlets where you've never had them before. And that's the cultural thing that was needed. And mind you, these were to rural women. 90% or even higher of Compartamos' beneficiaries are rural women, because they tend to be the heads of the households and the ones that really are out there earning the income and needing to make sure their families are provided for. So they've always looked at the cultural aspects. There are a few groups now that also take into account education and healthcare and those those types of activities along with microcredit. There's a very good group called Pro Mujer, and that's their mantra, if you have looked at some of the other non-for-profits out there operating in Latin America. And they provide education, healthcare, and the like, even daycare, sometimes to rural women that are working. So the cultural component is extremely important as we look to scale, because they have to obviously be the holistic view of the loan beneficiary needs to be taken care of for them to repay. We want them to be able to repay. So thank you for that. And any other questions today? I like to also say that I am very available to, oh, great.
Thank you for your work and for
Thank you.
sharing it with us today. My question is that you have talked about Accion and Compartamos and some others investing in people at the bottom of the pyramid, and certainly a goal with that would be that they can move to the next tier in the pyramid. And I guess my question would be, does Accion, Compartamos try to continue to provide services for them as they move up, or do they then enter different financial markets?
Great, that's a great question, thank you for that. We do cater to truly the bottom of the pyramid because we try to go where others won't go. The next scale up is the SME, small, medium enterprise lending, which you probably have heard about. And what we hope is that our beneficiaries become then bankable to the likes of Citibank that operates in 150 or more countries around the globe, and that they would be then a very good prospect for some of the more mainstream financial institutions. I'll cite another really great example. I lived in Peru for a couple years when I got my start in this business, and I worked alongside what was Accion's non-for-profit that we supported at the time, that was called the Accion Comunitaria del Perú. It was a small little microfinance group doing tiny loans all over Peru. ACP, as it was known, in the mid-2000s became a bank, just like Compartamos did, just like our Banco Sol did. And it became Mi Banco, and it was the most profitable bank in Peru for the micro sector. Mi Banco was sold last year to the Credit Corp group of Peru. For any of you that have looked at that marketplace, it's the largest financial group. It also owns banks in Colombia and in Chile. And it is the largest, most successful commercial enterprise in Peru. It has insurance, it has banking, it has asset management. And it bought Mi Banco because it wanted to be catering to that sector. We were able to sell our investment. It was a small investment we made many, many years ago, Accion, and we reaped $20 million in that investment. Which again, we are putting work today in Peru, in the really, truly rural part of Peru, in Puno, in Arequipa, in parts which really don't have much of a mainstream commercial banking presence at all. So we're taking that money and putting back into the country in a rural way. So the likes of the largest commercial bank in Peru recognize that they too they need to address this marketplace. So we do have graduates, thankfully, and that's why we feel this model is self-sustaining. So thank you for that. Good.
Let me ask an employment question.
Okay, good.
Do people spend a working lifetime in this line of work, or is this something that is a sort of sideline at some point, or an additional assignment, and they then return to mainstream investment banking or commercial banking?
That is a fabulous question, especially for all of you as you decide which track you're going to take in your own careers. I think that it goes both ways. You have private sector people who become enamored with this as really the tool to eradicate poverty. It's not going to wipe it out, but it will be certainly a big help. And they'll come over, and now with investment funds, which are doing quite well in this space as well, you can still make a pretty good living doing that type of work. So it's not that you're going to be forsaking your own career to go work at poverty type of wages yourself. There are others that go from microfinance to the commercial sector, and then because they want to learn the applications there, and vice versa, and they'll come back and forth. So I think it caters to both, and thankfully there is an ebb and flow because we need that. We need to cross-fertilize between the commercial sector and what we're doing in the microfinance space. I like to use myself as an example, if I will, of someone who has a day job working. I manage our investment portfolio still and try to find new business in Latin America for Deutsche, but yet I wear my Accion hat wherever I go. I wear my Notre Dame hat wherever I go, and I'm trying to also broker partnerships because that's really what it's all about. And in your careers, you will have ample opportunity to do so as well. As always raise your hand for that assignment. Wherever you do end up going to work, many of your institutions will have a charitable foundation. I always urge the newer entrants to Deutsche Bank to go talk to Gary Haddam, who runs our philanthropy group. Find out what we're doing in New York City or in Boston or wherever we operate. Get involved yourself on weekends or in other projects where they need to bear. If I could throw out one quick little plug as well, because I wear a lot of hats. There is a new initiative that Deutsche has taken root of or decided to adopt to sponsor, which is trying to broker for the inner city youth across the U.S. Partners with institutions, with academic institutions and students to be kind of a mentor to kids in inner city of New York or Boston or LA, and help the seniors that are in largely public high schools look at how to take an SAT, just kind of be a mentor program. And we're trying to find partners. So my next trip to Notre Dame, I'll be trying to promote that work. But those are just little things that you all can do if you're interested to try to play a part in the bigger picture of giving back. Which I'll end where I finished. I'll end where I started in saying that you're at a fabulous place. I hope you've taken advantage of everything Notre Dame has to offer. You'll continue to have Notre Dame at your disposal. The alums are a tremendous network for you. As anyone who here knows me, and a couple are in the audience, tap your network in your hometowns. I'm available to you as well. I think Professor and the folks at Mendoza know how to reach me. And certainly you just need to use your network and give back. That's the one thing Father Hesburgh told me when I left here, did my work in Latin America, and got my first job on Wall Street. Which he's always been very helpful in helping me make my network happen. And he said, Tara, I just expect you to give back. So I'll close with that, and God bless you all. Happy Easter, and good luck in your exams, and thank you for your attention.
Congratulations. Thank you so much.